In this presentation, we're going to record an owner deposit with the help and use of bank feeds. In other words, we're going to see a deposit coming into the system from the owner with the use of the bank feeds, and we're going to include that in our final financial statements. Get ready to clean up the bookkeeping mess with Sage Business Cloud Accounting. Here we are in our Get Great Guitars Company summary page within Sage. We're going to be opening up our reports by going to the reporting dropdown, opening up that good old balance sheet report. Once open, we're going to go back up top. We're going to be right-clicking on that balance sheet report, and we are going to duplicate it. Now, we shouldn't really need the profit and loss. We're only going to be dealing with the balance sheet here. So let's just open that one up. I think the date's okay in 2020, and then we'll get right into it. We'll go back over to the tab to the left. And then we're going to go into our banking situation up here in the ribbon, as has been our practice. We're looking at those last couple things that are going to be in the bank feeds, because we've been working with these bank feeds. We got two left that are still in limbo, the Sage bank feed limbo, and we're going to be bringing those on over, at least one of the two this time. We're going to be looking here at the deposits. We're considering the deposits. We're going to be considering the second one, this $50,000 deposit. Now remember, in our system here, if we're on a cash basis system and we see deposits that are going into the system, our default setting, our default assumption is they're from customers, and therefore we're just going to record them to revenue as they come through. That would be the easiest thing to do. That's fine, and just note that you want to make sure that if something is not from a customer, there's a couple kind of deviations from a deposit. Most deposits will typically be from customers, so you won't have as many kind of deviations there as you might have for on the expense side of things. Obviously, all the money going out, in other words, the typical rule is that it's an expense, but there's more kind of deviations because we might have bought an asset, we might have paid down a loan or something like that. On the deposit side, there's less deviation, right? When the deposit comes in, it's usually from a customer, or it's going to be from us, or it's going to be from a loan possibly. And those type of scenarios should be fairly straightforward, because if we put the money in, or if it's from a loan, it's probably a pretty set of numbers, meaning it's going to be even probably, and it'll probably be a different dollar amount than we typically see with regards to a deposit. So you want to identify those, because if we don't, and we pick up the default that has been set here, such as here, it's going to the sales line, revenue, then what's going to happen is it's going to increase our revenue if we were to put it in that setting. Even it'll increase the checking account, which is correct, but the other side would go to revenue, which is wrong, and that would increase our net income, which would also increase our taxable net income most likely, and therefore we'd be paying taxes on non-revenue, but us putting money into the business. So you want to make sure that you're going through your deposits and just picking those out. If there's any deposits that's not from the customer, you want to make sure you pick those out and put them to the proper location. Now, what is the proper location? Well, it should be some kind of equity account. So we're going to put this to some type of equity account so it doesn't hit the income statement. So if I select the good old drop down over here and we say, all right, we're looking for an equity type of account. I want to pick up an equity type of account. And so let's scroll down. So here we have the equities. And then we have the current portion. We got the owner contribution, and owner's draws. So those are the two that you can put in place. Now, the draws is us taking money out. The contributions is us putting in. Now, note that if you take a look at different software, you might have, they might do different things. Some people combine these accounts together, the deposits and the draws. Some people put the deposits into just the equity account, like the capital account. So we're going to break these out because those are the suggested accounts here. So I'm going to put this into the contributions account. Now, also just realize that the deposit's probably going to be more rare also because it's something that we would expect to see when you first start the business, that we would put deposits in, or when we're kind of doing a renovation or upgrading in some way, shape, or form. Once the business is rolling going forward, then we would hope that the revenue would be earned throughout the business, cash would be going up from customer revenue, and then we would expect to see draws. So you would expect an established company to have draws and not really more contributions, hopefully, because there's no need for the contributions. The company is now making money, hopefully sufficient on the customers' revenue, and then they would be taking the money out for the personal use, would be the idea. Okay, so then I'm not gonna put a 4 up top because this isn't a client or anything. This is gonna be money that we put into the system. I'm going to make it an electronic type of item, and then there's going to be no tax that will be involved with it. So there we have it. What's this going to do when we put this in place? It's going to increase the checking account, the other side not going to the income statement, not being on the P&L, but being in the equity section. So let's go ahead and create that and then check it out. So it's now created. Let's go to the balance sheet. That's where we check it out. And then we're going to go to calculate, recalculating this. And then our checking account's looking a lot better than it was before now. We're in the positive. We're in the green. So we'll open that up and see if we can see this deposits, which was for the $50,000. There it is. There's the $50,000 deposit, the other receipt. Now I'm going to go back and see if we can, we will be looking at the other side. There's not really, I'm pretty confident it'll be there. So we're going to go on down and it's going to be in the equity section. So we're going to go on down to the equity section. And we see then the 50,000 is the contribution in the equity section. So in the equity section, now we've got the net income, which is mirroring what's on the income statement. So note. So if you were to think about this in like a traditional kind of financial statement, you would this would roll into like a retained earnings or the capital account. And then you've got the owner contributions, which is the money that the owner put in. That's going to be increasing. And then if there were any draws that we had recorded here, we'd have the draws. And remember, there was draws that were taken out of the account cash, but we put them into miscellaneous. We'll talk about draws next time. So it's here down here in the equity section. You can think about breaking out the equity. It's kind of nice to think about the equity breaking out in this way. You'll note down here we've got the net income, which is going to be an accumulation, kind of like the retained earnings of the revenue, the money, the equity that's a result of business, us doing business. Whereas this equity is a result of, and it's still assets minus liabilities, the equity, kind of what's owed to the owner, you can think of it. This one is a result of just the owner putting money into the business, right? So it's useful to kind of think about those being broke out in that way. And then we can think about the draws, and that would be the equity that has been removed that will be taken out of the business by the owner. And so nothing's going to happen then to the income statement, no effect on the income statement. So that's going to be it for now. Let's get out of here.